Hello, everybody. My name is Thor Young. I'm a moderator at Bear Bull Traders, and I would like to do a recap for you today. I had a great trading day today. Ended up getting 4 winning trades, 1 break-even trade. Really had a really nice session today. Caught a beautiful sell on the SPY, and I want to talk to you a lot about that today. As per most of my sessions, I tend to try and highlight a specific topic. And in today's session, I want to talk a little bit about L2 and VPA and those kind of general signals. There's a lot of misunderstanding in the way that I trade because I don't trade the same way that everybody else trades. I have my own method of trading, and that's what I teach. My method of trading uses market maker movement and large participant movement as the major factor in what I use to trade, right? So I do use levels and I do use pivots, but all of those things are just locations that I'm going to look for things to happen. My major skill set comes in tape reading, level 2 reading, and reading volume and price, right? So, and that's really where my edge falls. So if those aren't your skill sets, then you are likely going to have some complication with using some of my strategies. However, once you learn to use VPA and you learn to read the level 2 and you learn to read the tape, like Mike Bellafiore with SMB Capital does, what you will start to learn over time is that these patterns, these levels, and these breakouts are just after effects of what's really going in the market, and that is that play between the market maker and the large participants. So you can either pay attention to what has happened, trying to anticipate what will happen, or you can just look at what's happening and then make decisions based on that. And that's what I do. So before I get into the trades, if you don't mind, throw me a like. I'd certainly appreciate that. Also, so inclined, subscribe to the channel and ring that bell. So now on to the trades. As you can see here, I have my SPY trade up here. I got a beautiful move on the SPY. I'm going to close out with that one. I'm going to go into my other trades first. So first trade was on Delta today. Delta had a earnings catalyst today. Looked, actually a good earnings. So naturally, I'm going to short it, right? Sell the news, as they say. Now, the main reason I shorted was because Delta had a bearish level 2. Now, when I say bearish level 2, what I mean, and this is contrary to what you hear from a lot of others, is what I mean is that you have large bids regularly placed below the current price. What this is it's evidence of an engaged bear, that the shorts are involved and that their profit targets are lower and that any bulls or major liquidity are staying away from the price to the downside. This is not a sign of strength. No matter what anybody tries to teach you, these are not support areas. These are price targets with a goal of going lower. You don't want to blindly long off of these bids. You only want to long if the bid holds and then you see buying on the tape coming in. There needs to be more factors. Otherwise, these bids are just fantastic targets. So as you can see here on Delta, I went short, and I went short as it broke down and lost this this level right here, which was pre-market low. Once it lost pre-market low, I triggered short, used the just the top of the candle right here, which is pretty standard for me. It dropped down. I threw a cover order right around 42.10. It filled right at 42.15. Really nice move. Right around 2-1. And then I took some more off here, and then we pulled back. I got short here under these, used just the top of these candles here, and then took some more profit off at 41.84. And then later just decided to go ahead and cut the whole position. The reason I decided to cut this position was because the level 2 emptied out. When the level 2 has no orders in it, you're in balance, right? There's no reason to even worry about trading the stock. If you have low average volume and you have no large bids or asks anywhere on the price, coin flip at best. Personally, time to get out or stay away. So I went ahead and got out. It sold down for just a little bit longer, and now it's found itself in just chop. If I was still holding this position, I wouldn't have any extra partials. I would still just be sitting here with my liquidity tied up. All right, next trade, MU. MU consolidated for a little bit, then made this new high. At the same time, the Qs were rallying. So I thought this looked like a good breakup as it tried to reject the central pivot area. Also had a nice seller sitting up near right above pre-market high. I went long. I used VWAP this time because my entry candle was just too tight. So I used VWAP this time. Got a partial as it broke pre-market high. Really good RVR on that one. But unfortunately, it didn't go, and I stopped at break even. After that, a bearish ladder did actually form, and we started to sell, which so sad. Apple had a very bearish ladder at the open. I did try to short it, but went ahead and stopped out at break even on it. Didn't like the way we dropped down, made that new low, and then bought right back up into my range. Inevitably, it would have held and worked and gotten to my price target, but I just didn't really care for that a whole lot. And now you can see here we found fair value, and look what's happening here over at my level 2. Look how we're starting to have orders come to the top side now on this, right? This is showing that our level 2 is actually starting to gain some bullish momentum because we're actually having buyers come in and we're putting profit targets up there. No matter what anybody tells you, these are not short sellers putting orders out here for where they want to go short. They're profit targets from bulls. It makes 0 sense for a short seller to advertise where they want to go short. It's not really how it works, right? If anything, all you're going to do is advertise where you are and how easy it'll be to stop you out. The market maker will just run you over all day. Nobody does that. Okay, well, nobody does that. All right, so last trade of the day was on SPY. Now, SPY is the one I kind of teased a little bit because it was such a great VPA trade. Now, if you were trading not using VPA, what you would likely see is a SPY that was actually trending and making it over VWAP and setting up above R4. Remember, R4 in the CAMS ranges and the Camarilla pivots gives us 2 options, right? Breakout, extreme reversal. And you got to pay attention. A stock, just because it opens over R4, doesn't mean it's going to go. You have to evaluate the stock and see what it does. You have to wait for the signals that the price action is going to go in the way you want it to go into. So as you can see here, we were pushing up and down, right, and consolidating, and then your signal comes in. This is going to be a quick VPA lesson for anyone who's interested. In VPA, when a candle moves, we expect volume to go with it. It's all about continuity, right? Things should perform the way they're supposed to perform. And if they don't, that's a problem. Anything other than the proper movement is a problem. When you talk about authors like Humphrey Neal, for instance, and he's taught this in the 20s, right? You only really have 3 types of volume. You have struggling volume, stopping volume, and then advancing volume. Notice there's only 1 type of volume for continuing, yet there's 2 types of volume for reverses, right? This is very important to pay attention to, right? Because that means only 1 scenario equals continued movement, where multiple scenarios meet reversals. This is why I play reversals a lot, because there's more indicators that reversals are about to happen than there are that continuations are going or advances are going to happen. This in SPY was an absolutely perfect example of that. So as we consolidate, look what happens on this candle as we try and break out. You get a big bullish engulfing candle. If you're not using VPA, you're going to read this as a potential 3-bar play. Your next candle is a smaller candle that closes in a hammer. It doesn't retrace more than half. But the VPA has this all wrong, right? This big bullish engulfing candle happened on almost no volume whatsoever. And then this hammer here ended up happening on extreme volume. This is a textbook isolated pivot. If you any resource that you look up to, you can Google isolated pivot, and what you're going to get is big move up, high volume, low small candle, big move down on lower volume candles, right? This is a textbook isolated pivot. So as soon as this thing pushes up, throws this high volume, a whole bunch of traders. I was already managing a position at the time, so I didn't take it short here, but I was calling it short here. And we had a couple of our traders like Mark and MB and quite a few others got short up here. and got a really beautiful move down. Me personally, I waited and got in short just after, because look what happens here. We get this nice push down, and then as we retrace, we get just nice average volume on the retracement. No large spike in volume here, no big aggressive buying, nothing to insinuate that we're going to reverse, so we can assume advancement. We also had large bids lower on the level too, insinuating that our liquidity and our profit targets for our shorts were lower. So I shorted here, just used the 434.50 level, right, which gave me a nice move. I took profit at PDC or just above, and then more as we went down through R3 and then daily levels. Really, really good trade on SPY, and made really, really a really solid profit target on it. I held on to it for a little bit longer because we had a really strong bid sitting at 431.50. I put my biggest partial of what was left, so almost half of everything I had left, I put all the way down there. You know, at this point, I'm not even worried about R, right? I'm just going for the biggest target I've got. It hit that big bid. As soon as it hit it, it bounced, and then more buying came in with it. So I went ahead and went all out at the loss of the moving average and done for the day. So really good management here, really dialed in to the market. But the main point I want to get across here is VPA can get you out of so many bad patterns and market reads. But it's not the only way to trade. If VPA seems like it's something that doesn't work for you, we have Eamon here, we've got Jared here, we've got Andrew, right? We've got Brian. We've got so many different moderators here that all trade using different styles, right? Not one of us trades the same way. And that is something that should speak true to you, because not one of us really trades the same way probably means there's not one way to get it right in the market either. So look around, find what gravitates you to that, and then keep going. For me, it's VPA all day. So I hope everyone has a great day, and as always, keep it green. Thanks.